Yeah. Tanya, good morning.
Good morning.
Good morning. Hey, everyone. So we're here with Milestone Title's own Tanya Rodriguez here, and she's going to take us down the road to the ALTA today. So we're talking about critical documents that agents should know how to read, and we're going to show them how today, from contract, the commitment, all the way up to the ALTA, which is a lot of times what agents usually see more than anything. But we're going to go over some critical documents before that today, right?
Yes, and these are documents that we're all familiar with. I'm just showing it from a title agent's perspective, the spots that we look for to put our numbers together, which is what they ultimately see in the end.
We're getting into a title agent's head today, so that's going to be good for us, especially
It could be
Tanya's.
scary.
I'm going to get out of here. Tanya, you take it away and take us down the road to the ALTA.
All right. So the first thing that I'm going to go over is going to be the sales contract. That's where we start the process. And so I'm going to share that here and just point out again, the items that we look for. And so this is just a standard FAR as-is contract, and I try to highlight some of the things that our eyes go straight to. And they're obvious for some people, but I just want to start there. So obviously we've got the purchase price and the deposit that's being expected, and those are things that we'll be looking for in the end to make sure that they all match up. And then we've got the balance to close, which would vary. It's going to be once the lender tightens up the loan amount, if there is a loan, that would vary a little bit, but it gives us our basis. And here also we're going to see what kind of contract or financing we have, rather, because that can affect some of the costs that are allowable and that you would be looking for, whether if it's cash versus loan. And so the next place our eyes are going to go is to this section here. And this is pretty important and underutilized, in my opinion. This is going to just really spell out to the agent or the person preparing numbers, as well as the lender, who's paying for what. Common items here that you'll see paid that'll show on each side, but that would typically in our area be paid by the seller. Doc stamps on the deed, the owner's policy, where it talks about HOAs, these estoppel fees here. Those are things that we'll be looking for, or once you get to the ALTA, if you're wondering where they came from, this is where you can refer back to. The lien search, which I did not include in my example, but that's typically paid by the seller, and that's a charge you'll see for your seller if you're looking at the ALTA for your seller. And this is a great spot for the agents to let us know if there's transaction management fees under other, and some do, but oftentimes we're just verifying it verbally, when we get to that point, to make sure we don't miss that. So this section, we pay close attention to. This is also an important one. Again, in our area, most of Florida, most counties, the seller does customarily pay for title. So we'll see that, but we're going to double check to make sure that there weren't other negotiations made. So we're expecting when that box is checked for the owner's policy and to be on the seller side, and those charges to go to the seller. Here, if we're led to collect for a home warranty, it would be listed here. Oftentimes it would say not to exceed. So for example, a seller will agree to pay $600 for a home warranty, and we get an invoice for $750. And so the difference obviously will go to the buyer's side. Sometimes the agents help with that from part of their commission, but oftentimes you'll see a home warranty charge on the buyer's side, and everybody's like, wait, the seller was paying that. Well, it exceeded what the seller's concession was for that. So that's why it might be split. This section will go into assessments. We don't see that very often. Some counties that do paving assessments and things like that, we have to get more into detail, but typically the taxes are prorated like you would normally expect. And then after that point, as far as we're concerned for numbers, I don't want to make you dizzy, but I'm going to scroll down kind of quick here to the section that says other. And here's where they would let us know for the additional terms if there's a seller credit or anything extra that we need to account for. We're also going to be looking for riders for HOA and condos for the prorations and for estoppel fees and things like that that can come into play at the end. So that's where we're going to start, which is the contract. Pretty self-explanatory, but just wanted to highlight the sections that that call our attention.
Too. I was
So,
thinking,
sure.
is there anything that agents need to know about when certain things are marked on the contract? Anything that's missing sometimes we see from agents? Is there any information missing on the contract or something that should be provided with the contract indicated by one of those check mark boxes that we see missing
Okay.
sometimes?
All
How can
right.
we help?
Yeah, that's a great question. And there are things that would really help that we often do not see.
Sure.
Let me go back to that contract and I'll show you where we're always wishing maybe there was a little bit more. Not always, but often.
Perfect.
So
This will
let's
be great
go.
because this is some insight from the title agent that you don't normally get on what could really help transactions go even smoother.
Yes. So we'll start at the top with the seller. And you can see my screen okay, Ryan?
I sure can. It looks great. We all can see it.
Okay, great. So for the seller, oftentimes there'll be two individuals entitled for whatever reason. One of them is there to sign the contract. And so we will only have one listed seller. And then when we get our search back, we have to dig a little bit more and start asking questions as far as, are they still together? Is that person still alive? Are they estranged? Why is only one person selling when there's two entitled? So that happens quite a bit. With on the buyer's line, this is kind of a hot point for us. When we get into vesting and title, the contracts rarely, if ever, state what the vesting for the buyer will be. And that's kind of left to title because in the past we would go over that at closing and discuss it. But over the last few years, we've really been told to not get into that. It's giving legal advice and estate planning, so we're cautious. We are supposed to vest a buyer the way they are listed on the contract. And so if it says John and Jane Smith, we're not supposed to just add husband and wife or joint tenants or any of the vesting options if it's not on the contract or we don't have a specific directive. And even directives are tricky. The best thing is to really put that on this line with the buyer. So we love it when it has two people and it says husband and wife, then we know, or tenants in common. And there's so many reasons why you would do it one way versus the other that we can't guess or give advice. We just would have to know their whole story. So that's a big one. Also, the spelling of the buyer's names. A lot of times we'll get the short version, Sam versus Samuel, with or without a middle initial. And then the buyer will, through our platform, they have the ability to verify if it's correct and they want to change it from the contract. And then it puts us, again, where we're having to go back around with everyone, including the lender, to make sure that we all match. So clarifying how the buyer wants to be vested in title at this point is very helpful. And it rarely ends up on the deed the way that it is on the contract for those nuances that I was just telling you about. So those are two very fundamental things that could use, a little more time, I think, when the contract is drawn, because it has implications in the end that we're trying to tidy up. Aside from that, everything else in that section is pretty good. I talked about where you have the option to elaborate on who's paying what charges and where the agents can add their transaction management fees, which would be right in these sections here. And then nobody misses them because it really upsets agents. And sometimes it upsets them that we call and ask so many times because we know that upsets them and we don't want to miss it. So if they would put that in this section, if the agents would put that here, it would be there. We would all see it, including the lender, because oftentimes, especially for a buyer with a lender, if they don't see that and then we add it at the last minute, it can throw off their disclosures.
So
and the
Tanya,
buyers, yes.
So back up there, when we go to fees paid by the buyer, that's where we would put our transaction fee. So if your title agent has called you a bunch asking you what your transaction fee is, and you know that they know what it is, but they still call, it's because it's not on the contract here, right?
Correct.
Okay, cool.
Correct. Even here for the seller and the buyer. And honestly, we might still ask just because things do change and we just don't want to miss it. But this would eliminate a lot of that. If for the seller's transaction coordinator fee, or broker fees. Some agents, their broker has it, so it's not necessarily transaction, but those types of fees processing. This is where we would look for that initially. Sometimes there will be mention here for seller concessions as well as at the end for additional items, but these are a great spot to let everyone know what needs to be charged at the end so that it's not missed or added at the end, throwing off anybody's expectations. These things are self-explanatory. And the only other thing that I would say that would be very helpful for us that's often not completed on a contract, sorry if I'm making you dizzy with this fast scrolling, is where it goes into the notification here. So the seller and buyer's address, we really do want to know what their current address is, and those are things that we find ourselves chasing down. Phone numbers, I know it doesn't have a specific spot for this, but phone numbers or email addresses for the buyers and sellers in this section is very helpful. I know you don't always want to put that out there, but the buyer's current address and the seller's forwarding address, those are things that would really help us.
Thanks for some of those extra details on how we can all help each other to move forward with smoother transactions. That's important.
Yes, because everybody has a different process, and with their coordinators, sometimes the coordinators will send us a very detailed email with the contract that gives us all this information. Sometimes they don't. People are jumping in and out, but again, the contract is our first starting point, our Bible, and everything that can be here, should be here so that we're not bouncing back and forth. Those are the spots on the contract that we find ourselves sometimes wishing for a little bit more. Once we've gone through the contract and we get our basis, then the next thing that we would be looking at once we have our title search back is our title commitment. So I'll go ahead and share generic commitment here and kind of go to the hot spots here that again are just going to put in mind what you're going to be looking for in your final figures and things that will trigger you to be aware of and kind of circle back to when you see a charge that you don't understand, you can come back to your commitment and probably find the answer as to why it's there from your commitment. And there's a lot of things about the commitment that we could talk about, so I'm going to skim over it and really try to focus on what would affect the numbers in the end, but I'll talk a little bit about some of the key items as we go through it. Not to scroll so fast. So the first two pages that we saw there is essentially our jacket for the commitment. There's standard language in there, but this is, I'm gonna change my view so we can see 2 pages at a time. Okay. So this is Schedule A. This is really where your title commitment starts. And some important things here on this first page. So where it talks about the proposed insured. In this case, we're doing a purchase with a loan. So we'll be issuing 2 policies, one to the buyer, ensuring them that they will be the rightful owners and they'll have clear title, and one to the lender, ensuring that their lien is in proper position and that it is a foreclosable document that we're insuring. In that case, we're actually insuring the mortgage document. So here where it says proposed insured buyer 1 and buyer 2, this is where that vesting comes in. If the commitment shows just like that, that's how their deed is going to read. If you see the comma, husband and wife, etc., things like that, then that's where the vesting will flow through to their deed and how they would hold title in the end. Here we've got the lender, that loan amount came right, once the lender clarifies that or tightens that number up, that's what the final loan amount is going to be. So that we will see in our end figures, of course. Here, this under item 4 is telling us who the current vested owner is. And here is where we will find some variations. We'll see that there are 2 or 3 people entitled, but just that one seller listed on the contract and signed the contract. So those are items that we'll be clarifying. So we went over Schedule A, which is the proposed insured information. Schedule B on the title commitment is going to go over the requirements that we as a title agent have to clear in order to give those policies without exceptions that are significant. There will be standards, but in order for us to do what we're expected to do, the requirements on B1 is what we're going to be looking for. And so the first items are going to be standard, the first four typically, and there's different formats, but they're pretty much the same. They're telling us that we need to insure the proposed insured the way that they were presented to us. We need to ensure that the buyer, for example, in this case, pays the seller the amount that they agreed on. So as an escrow agent, we'll be facilitating that as well. And number three is talking about we have to either create or obtain documents that satisfy these requirements and make sure that they're recorded if we need to do that as part of the requirement. Number four is to make sure that we get paid, the title company. We have to remit to our underwriter and make sure that we collect premiums based on the formula that's given to us by the state of Florida. And then we get into the meat and potatoes of what we're actually doing. So this is very typical. We have to get a deed, make sure it's right, get it executed, get it recorded. We need a mortgage document, same deal. Make sure it's correct, the vesting is correct, get it properly executed, get it recorded. Those are things that we have to do in order to be able to ensure that. So this pulled that requirement twice. That's just a duplicate, but there we go. And so then when you're looking at figures, for example, in this case, this would affect your seller. Now we're talking about the items so the first items were the insured documents that we're talking about. Now we're going into the items that were discovered in the title search that need to be addressed. This would affect the seller. We have to get a payoff. There's an existing mortgage, so we're going to get a payoff. That payoff figure obviously is going to affect your seller's bottom line, so you know it's going to be there. In this case, if there was an HOA, again, I kind of simplified this requirement. It's not exactly how it typically reads, but just so that you know what it means in the real world. When we see an HOA listed on our commitment, it means that we need to get an estoppel to confirm what fees need to be paid and prorated. We're looking to see if buyer approval is required for that subdivision or for that condo or association. And then we're going to add those fees to our disclosures and collect them and then disperse them. And that could affect both the buyer and the seller's figures. Most associations have a transfer fee for the buyer, and the seller will typically pay for that estoppel certificate that they charge for. They know we need it, so they charge for that, and they can be quite expensive sometimes, even though they seem to have calmed down a little bit with those estoppel fees. And there could be a capital contribution from the HOA or the condo, and those can be significant and sometimes unexpected. So those, if you see a capital contribution, you can bring it all back to the contract and the commitment showing that there was an HOA and that's where that came from. Here I put a sample. If there was a judgment that we found in public records, that could be our sellers. We may be either looking for a payoff or we're going to be recording a document. Again, this was me kind of just simplifying the language, but what ultimately that requirement is telling us is that get it paid, or if you can confirm that it's not our people, get an affidavit executed and recorded. And that would result in a reporting charge on the seller side to have those pages recorded with the county. We don't charge to prepare it or have it executed, but the county is going to charge us to record it. So you might see a few extra little fees kind of wandering around your ALTA there that come back to that. The final requirement on most Schedule B ones on your commitment, which is great for everyone to look for, especially, well, actually for both sides. It's important for the seller because it will tell us here if they have already been paid. So if they haven't been paid, obviously that's going to be affecting your seller's net. But it's also going to give you the last year's gross tax amount. So the agents can confirm for their buyers that what they anticipated for taxes is still correct and that there hasn't been a change. And then Schedule B2 is going to go into exceptions. This is showing the standards. Exceptions are going to really let everyone know what we're not insuring. And those are things typically that are not found of record. We can't, insure over things that are unfound or unseen. This will also go over survey exceptions. If there are encroachments into an easement or easements at all, we want the buyer to be aware, and those will all be listed there. So nothing that affects the fees per se on the exception typically, but just to finish going over the entire document. So just to summarize, I want to make sure my sales price is correct. I want to make sure that my loan amount is correct. The vesting and that information is kind of a different class, but also important. Here with the requirements, this is going to be where, you know, the money items come from together with the contract. And that's about it for the commitment, but those are the items that'll get us there.
Timeline. I wanted to find out, when does an agent or a transactional coordinator around the timeline, should they expect the actual commitment from their title company?
We usually get our search back and have at least a preliminary commitment prepared 3 to 5 days after we get the order. So at that point, when we generate it, if we have all of our contact information in the file, we send it to the buyer and the buyer's agent as a preliminary, just as a matter of course. Sometimes that will fall out of the process if it's a cash deal, for example, or if we don't have the contact information yet, because we're, you know, sometimes we get a contract that's not going to close for 60 days and people are not as pressed to get us that information early on, and we're not as pressed to go chasing it. But in a perfect world, within 3 to 5 days, the buyer and the buyer's agent will get at least a draft title commitment to see what we're working with. The other trigger that might get that to be sent out is when the lender requests title. So if we pull it in and there's nothing to be done at that stage, and then we're just waiting for the lender to request their title work, and we prepare a formal final commitment at that point, we would shoot it out to the buyer's agent at that point as well. See, so the next form that I'm going to share, just to kind of give us again a basis, I'm going to go over the lender's closing disclosure for the buyer and the seller's CD. So these two items, when there is a lender involved, are what we get executed at closing. Okay, so here's the closing disclosure, and most of us know how to read it, even though it's very busy. It's similar to the HUD that we used to use. As a matter of fact, let me actually. Okay, so this is the HUD that we all miss and loved because it was very simple. We had a 2-page document initially, and then it went into more with Dodd-Frank. But for the most part, this is your HUD 1. And you had we always started on page 2, at least I did when I explained this. We went over the breakdown of the cost. You had your totals at the bottom, and then you carried everything over to the front. So you would have your sales price plus the cost prorations that were due. It gave you the total amount due from the buyer. Then you had your credits with your loan amount, your deposit would be here. And then again, a tax proration that would give you the total credits to the buyer. You would subtract the two and you had your bottom line. Easy peasy. All made perfect sense. It was great. And then that went away. So instead of starting at the first page, even when I'm in closings, I typically will skim over the first page as a summary. But when it comes to explaining the numbers, this page here, page 3 of the CD is actually.
Hey, Tanya, the CD is not showing on the screen for that one.
Here we go.
There it is.
There we go. Sorry. So the first page here is going to go over a summary for the buyer and their loan information. I did highlight the key items that as an agent you're looking for. You want to make sure your sales price is correct. We often have addendums that'll tweak that. So we want to make sure that the agent did have the last addendum and that was updated. We've got the lender's loan amount. This will go into some of the loan details. And it's going to break down here at the bottom what the total charges are and what the cash to close is. But this is not going to make sense on its own. So here on page 2 of the CD is actually pretty much our page 2 of our old HUD. So again, it's breaking down the cost, even though it's a little busier, not as easy on the eyes. It's essentially the same form. You've got your buyers column of costs, your sellers. And then here you'll have paid outside of closing by the lender. And some items that you'll see often off to the side. So it's broken down into the different sections of charges that will keep following us through the theme. So you've got your origination, things that the borrower didn't shop for, basically items that were needed to originate the loan. And then typically the title charges and survey and things like that will be in section C. You get your totals. Everything is going to come down to the bottom. And then it carries over to page 3. So again, this is now really page 1 of our old HUD. So we've got the total of, we start with the sales price and adding up the charges, and it puts the total due from the buyer up at the top. And then everything in section L is going to total up, which I think is what makes it weird. The HUD used to total down. So you would look down for your totals. This makes you total up. But then you have your differences at the bottom. So these are switched. So due from the buyer, total, due to the seller, and vice versa. So you get the idea there. One of the things that can get a little tricky, and I would probably want to pause and go over that now, is the title insurance premium, because that is very confusing for people, and that will vary from the CD to the ALTA. So I'm going to touch on it now, and then I can elaborate a little bit more. In the state of Florida, the owner's title insurance premium is charged at full price. And the lender's title premium, when issued at the same time, is issued at a discounted rate. The country, maybe this was why I was thinking 2012 earlier when we were talking, I believe it was around 2011 or 12 when they started changing this on us. Half the country did it the other way around. They charged a full premium for the lender's policy, and if the buyer chose to get an owner's policy, it was at a discounted rate. So the country was divided, and the other guys won for the most part. So the lenders will show the full premium for the buyer, the owners and the lenders on their column, and then show a credit from the seller called this title policy adjustment. The long and short of that is that in the end, it's the same figure. It's just a matter of how the lender is requiring to show that. That's the only thing that I would think that our guest on this call would not know exactly how to reconcile. Everything else is pretty much self-explanatory. Your lender's fees, this is the recording section. Here's where I talked about where you would see it maybe to record an affidavit for the seller to clarify something. We see the doc stamps on the deed here. This is going to be based on the pages of the mortgage from the lender. The buyer does pay for the deed and the recording of that. So this is for the pages. And then the doc stamps and intangible, those items would calculate automatically based on the state and county calculations. So here, section H is where we'll see all of the miscellaneous items and the commissions. So oftentimes if you are looking at a CD from the lender, it will not show all of the seller's items, specifically the commissions, estoppel, things like that. The lender, for the most part, some of them are very particular, but most of them are concerned with the buyer's figures being correct because they rely on us to prepare the seller's CD, which I'll go to next. This now is the seller's closing disclosure. So the lender knows that we're going to prepare this and have everything we need for the seller. You will not always see these charges on the buyer's CD from their lender. So this again is just to give us the basis and review it one more time, but it's very simple compared to the last one. And it's basically the same format. So again, I usually start on page 2. I get my total of charges, and then I go back to page 1 and pull it all in. Sales price plus the proration, total amount due from the seller. We deduct the costs that we just saw on page 2. In this case, they're giving a credit back to the buyer because the seller wasn't initially charged the full premium for the owner's policy. He agreed to pay it, so he's going to pay it whether it's the full charge on his side to begin with or a partial charge with the credit to the buyer. So then you've got your total due minus the deductions, and here's your seller's bottom line. So those are the 2 CDs, and these are, in my opinion, easier to look at, to get to the bottom of. So if you're looking at an ALTA, I would recommend an agent ask their title company to share, if they're working for the seller, share your seller CD and the ALTA so you can look at them both together. And if you're a buyer's agent, you can ask the buyer's lender to also share their closing disclosure with you. You might have to give an authorization or have the borrower forward it to you directly. But if you have any doubt, I would start with these two forms if you're as comfortable with them as I am, and then go to the ALTA finally, because as you will see here in a moment, the ALTA just doesn't hit your eyes the same way for some reason. So this is the ALTA and the road we're trying to get to. And what I've done here is separated it, because we have the option to do just a buyer side ALTA or just a seller side ALTA or a combined. Our preference is combined because we would just have less pages to marry for our final disclosure. And let me back up and state that the reason why we have an ALTA is because we're not supposed to share the buyer's closing disclosure with anybody. And it has to do with the personal loan information and things on there that are really not anybody else's business. So the ALTA just has less of that personal information and is something that we can share with our agents, with insurance companies, with the homeowners association. They sometimes ask us, they want to see those numbers, and we're not supposed to share that closing disclosure. So that's why we have this guy.
So my understanding, the whole reason for the ALTA, from what you said, being different from the CD for both the buyer and the seller, is because of keeping private information from different people's on the sides of the transaction's eyes. Is that what I'm hearing, why we have an ALTA?
That is correct. That is correct. And I think that's where some of the confusion comes, because again, if the reason why I personally would use one, just a buyer side ALTA versus just a seller side versus combined, we might have the seller sign ahead of the buyer and we might not have all the lender's information yet. So that would be one reason why, as an agent, you would in the end get a seller's ALTA and a buyer's ALTA versus just one that has everything together. Even though the numbers, will all match in the end. I think that's part of the confusion, because we've got now three forms: a buyer CD, a seller CD, and an ALTA, and they might not all be inclusive of each other. The seller's obviously not going to have the buyer's charges on there, and the buyers might not have, well, it won't have the seller's charges on the ALTA, but even the lender's CD will not show all of the seller's charges. So let me go back to single view here. But ultimately, if you take a step back and go over everything that we just talked about, it is basically the same format for the most part, or a different format, but the same general idea. So here on the ALTA, it's going to summarize who we're working with up top, but it doesn't give the buyer seller's address. It doesn't show interest rate, payment, things like that. APR, those items that are now on the CD. And they do separate the sections. So I highlighted that because even me, I don't realize sometimes that we do have these headers, because everything just blends together. These lines are like, they'll make you dizzy. But ultimately, in this case, we've got the buyers, you've got your debits and credits. So it's going to give you the first primary charges that would be on our first page of our CD, telling us this is your sales price, this was the deposit you got, and the buyer's loan amount. And then whether you want to zigzag, or go through one and then the other, that's up to you. But, again, if you're having a hard time putting this together, if you have the CD to refer back to, then you can compare and make sense of it, sometimes a little easier. So where the loan charges on the CD were together with the title charges, basically in that section B and C, on the ALTA it gets split up. You've got your prorations, your loan charges. It goes into basically all of the lender fees first, the recording fees, and then title and miscellaneous is at the end. And because this is a buyer's ALTA, we're not seeing the real estate commissions, but we'll see that here shortly. In this case, the transaction coordinator fee for the buyer would show up under miscellaneous. So I didn't highlight this header here, but I would maybe give that as a tip. If anything, just, look for your headers. If you're looking for something as an agent, did they get my transaction fee? That's going to be under miscellaneous. And the title charges, obviously those things go back to your headers if you're trying to find it. Because if you start looking for numbers here, it's easy to get lost in it. So that's the buyer's ALTA. Here we have the sellers, same deal. but the seller side does have a breakout for commissions specifically, where the buyer side will not. But still, the transaction coordinator fee for the seller, for the listing agent, is going to show up under miscellaneous. So again, debits and credits. It seems very simple, but I can understand why people have trouble, because even myself sometimes, this section on the bottom, for example, it gives you your totals, and it tells you your total debits, total credits, what's due to the seller, and then it totals them back up again. It's very simple, but if you think about it too hard, it kind of gets jumbled in your head for some reason. At least for me, it does. So there's the buyer and the seller once separated. That might make it easier. You can always ask your agent to separate them if this combined version that we're going to look at now is more difficult or confusing for anybody. And I don't mean difficult in the sense that we can't figure it out. We're all smart enough, but we just want to be able to look at something and understand it at a glance. So this is the mother of all. This is what we're having this class about to get to. Ultimately, ideally, when your agent or your title agent is sending you the ALTA to review for closing, or you're reviewing it at closing, this is the form that we're talking about. Now, by separating the forms earlier by buyer and seller, the benefit is that you can do them one at a time. And I would still recommend doing that, even if you're looking at a combined one. I would take the seller's columns first and then the buyer's, because if you start doing this number here, it's by the time you get to the end, you'll either be asleep or you're going to have to start over. So I would go over the seller's items first and do the credits and debits. So you've got your sales price. That's where he's starting off in his credit section in the plus. And then we're going to deduct the portion of the taxes that he's going to owe. He gets a credit back for other taxes that he paid in advance. Here you're going to see a debit for that title policy adjustment that we can talk about more, or we can talk about it in another class, just to kind of explain more why that happens, but I went over it, I think, enough for now. And then again, your headers. So I highlighted them. I wish they would highlight it on the form itself, because otherwise it just blends in. You wouldn't even really look for that. But we've got our loan charges, the escrows for their taxes and insurance, the recording fees, and then you've got your commission. So everything is going to be on this one. That's why it's ideal to be sending out and to have both sides sign. And then let's see, so we've got all of our miscellaneous. Again, it's almost like I would kind of cover, like try to ignore one side or the other when you're reviewing it. Review them both, but do them one at a time, in my opinion, to get to your bottoms. And then this little box, again, it seems so simple, but if you're not careful, it will mess with your eyes. And I'm guilty of that. I've had a couple instances where my eye went to the wrong place. So here we've got the seller, we've got the buyer, and the subtotals. And the thing to remember here is where it says due from buyer, you're looking off to your right. And due from seller, you're looking off to your left. I don't know why, but it's easy to confuse whose side you're on and what number you're looking at because of the way they format this. So, oftentimes, and because these lines are so I don't know the word, mono something, they just kind of blend. You almost want to put your finger on it and drag it over to make sure that you are where you are. And so when I would look at the CD, or when I'm doing a closing rather, and let me look at I'll do it with, like on the seller's version, it'll be a little easier. So when I do a closing, I start with the CD. I go over the second page, I come down and I say, okay, and this is your bottom line. And then I typically, might be a lazy way to do it, but it just seems to flow better, is that I see this bottom line, 453, 144. When I get to that ALTA and I say, now here, I go to the bottom line first. I say these are the same figures. It's a different format that allows you to see both sides of the transaction. But as you can see, your bottom line is the same. And then if they want to look at it, we will, but usually they won't, because we've already gone over these numbers on the CD, and they're comfortable that the bottom line is the same, and that's how we got there. I don't know, other than that, really, what I could do to guide you, but if you have questions specifically, or if somebody wants to send you questions and we can revisit it, you can let me know. But
That would
does
be
that
awesome.
help? Does that help you?
That is super helpful. You simplified. Thanks for being a great tour guide on the road to the ALTA. Yeah, it was awesome. I'm going to actually time code this too, so we can go over some of the critical documents, the contract, the commitment. You gave us lots of good tips, even from looking for those headers to, miscellaneous, being places where transactional coordination fees, when those things will be in.
Coordinate.
Yeah, but you did an awesome job. And please, if you see anything on here or would like to go in depth about something, I'll have information. You can reach out to me by email. I'll get that answered for you. If it's a CD, seller CD, closing procedure, whatever it might be for title, milestone, we're here to help. So thank you, Tanya, so much for giving us all this info today. It was really good.
Thank you. Thanks for being patient while I try to get a little more savvy here.
We're looking forward to, this is your first real Zoom. You were going right through the screen shares, and our next one is going to be awesome too. We'll come up with another class because you're just a wealth of information, and we're lucky to have you at Milestone.
Thank you. I'm happy to be here.
See you soon.
Great. So just a quick note here on the title insurance premium. The example that I used was disclosing title premiums the way that the lenders are directed to disclose them per TRID. So here is explaining, it kind of goes into here, and I just highlighted the keywords. This explains the difference between federal law and Florida law. And the chart below is going to show what was disclosed by the lender and what is actually charged. So on the closing disclosure, they're going to show the total lender policy premium or is on the buyer side at the full rate. And then it's going to give you the total for all policies. So the CD in this case showed that the buyer was paying $25.65 for both owner and lender's policy, and the seller's contributing $700. Or I'm sorry, not both. Rather, they're paying that for the lenders. The seller's contributing $700 towards the owner's policy. In Florida, the way that it works and is actual, regardless of how they disclose it, we charge $325 for that lender's title insurance policy when it's being issued simultaneously. So the seller pays full premium for the owner's policy for the buyer, if that's the way the contract was written. And the buyer pays for their lender's policy and endorsements required. That's, in our view, the only way, that seems fair. The seller's giving the owner's policy as a show of good faith and as part of their negotiations on their contract, and then the buyer is responsible for what their lender requires. At the end of the day, the charges are the same, but what will happen is, since the seller agreed to pay this amount for the premium in this case, and the lender only disclosed initially this, you're going to see a credit from the seller to the buyer for the difference. And so that gets broken down here. So the owner's policy in this case was $25.75. The lender already charged the seller $700 of it. He owes the buyer the difference of the premium and what the lender charged. And that's it in a nutshell. And it's not that complicated, but it is pretty tricky. And if we get into how they calculate that, that's another story that I don't want to send anybody down that rabbit hole. We don't really need to know that. You just need to know that when you see that title premium policy adjustment on the CD, you might see on the ALTA it disclosed this way, but the two figures for the total premiums charged will be the same. That's it. That was just my note on that.